Home sales are plummeting, and typically when home sales drop, prices drop shortly thereafter. That's definitely the national picture, as well as the statewide picture here in California. But what's happening in the Los Angeles market specifically? That's what we're looking at today, and the answer is a little disappointing. So buckle your seatbelt for the Los Angeles Real Estate Roundup for June 24th, 2024. For anybody who's new here, my name is Jon Schwartz. I'm a real estate investor, realtor, and house hacker for those in the know. Here in Los Angeles, let's get into the data. All right, we're going to start with the National Association of Realtors' newest print reflecting existing home sales statistics from May 2024. This data came out about 2 days ago. We're going to come down to the total existing home sales number. Now I'm going to remove myself. And this is the annualized rate of home sales, meaning we look at how many homes were sold this month and come up with an annualized rate. For the month of May, we were down at 4.11 million homes for sale for the month of May annualized. This is an extremely low level. Really, the only time we were lower was for a couple months last year. Now, last year, we sold 4.09 million homes. Now, we are technically trending higher than last year in the aggregate, but if we scroll down to total existing home sales percent change year over year, we're actually down 2.8% from where we were last year. So last year was the lowest home sales year since the Great Recession, and this year is trending 2.8% lower at present. Now we're looking at the California housing market update, again for May 2024. Again, these are numbers that were just published, and we can see existing home sales is at 272,410. That's an annualized number for the month of May, and it's down 6% year over year. This graph shows existing home sales going all the way back to January 2005. Here we are this month in May at 272,000, and you can see the normal level of home sales in California is somewhere between 400 and 500,000 home sales per year. And again, we have a situation where last year, 2023, this blue chunk of lines was a very low sales year, and we did have numbers here at the end of the year south of 270,000, but we are now trending year over year lower than last year, which means that this May, we're seeing 6% fewer home sales than last May. So what's happening in Los Angeles? All right, now we're looking at the Redfin weekly housing market data for the Los Angeles metro. We're looking at homes sold, and I just have up this year, 2024, the orange line, and last year, 2023, the blue line. And as you can see, homes sold is at 1,074, year over year, up 0.1%. In fact, you can see all year that home sales this year matches almost exactly home sales last year. So even though home sales are down 2.8% nationally, down 6% in the state of California, in our market, in the city of Los Angeles, home sales are not down at all. In fact, they're up 0.1%. Why? How can this be possible? Well, you hear often that LA is a constrained housing market. We don't have enough housing for the people who want it. And this is exactly the evidence you need to see that. Even though mortgage rates have remained high all year, even though home prices have climbed all year, the number of homes being sold has remained equal, unlike the rest of the state and the rest of the country. Despite this year presenting a more difficult home buying environment because rates have remained very high, pricing is higher, the number of homes sold has remained constant, meaning the demand has remained constant, or rather, it has just dropped a tiny little bit. Let me show you what I mean. Right now, we're looking at weeks of supply, 2024 versus 2023. Right now, our weeks of supply has ticked up a bit from last week to 13.1 weeks of supply on the market. This time last year, we were at 11.2 weeks of supply on the market. And as you know, weeks supply is one of my favorite metrics because it balances supply against demand. It compares the rate at which homes are being listed with the rate at which homes are being sold and gives you one number representing it. So there's exactly this much more demand-adjusted supply now than there was last year. And more supply means relatively less demand, means downward pressure on pricing. That is a very small margin right there. But let's look at the actual listing numbers. You'll see what I mean. Right now, we're looking at a graph of new listings per week. Again, comparing 2024 to 2023. We actually had a decline this week in new listings from 1,478 to 1,430. I'm not concerned about it because we had a very similar decline at around the same time last year. You know, the school year just ended, summer's just started. A lot of kids are getting dropped off at summer camp. My brother dropped off his 2 daughters at summer camp this past week, and that could account for why listings are a little bit lower this week. People had other priorities. Families had other priorities, shifting from the school year into summertime mode. And I've pointed this out before, but what's important to note is that new listings this year has been higher than new listings last year, every week of the year, since the beginning of the year. And these are just new listings, so these accumulate to create more active listings. Let's take a look. And here we have active listings significantly higher than last year. We fell off a bit from last week. Last week we were at 13,858 active listings on the LA market. Now we're at 13,832. A very small decline also in the year-over-year change from 15.47% to 14.84%. But still, we have about 15% more homes on the market this time this year than this time last year. And that's fantastic. That means that buyers have more choices. That means we should be seeing some price relief. I don't know if we are, but here's what's troubling me a little bit. If we scroll down to the year-over-year change in active listings, we can see that we peaked a number of weeks ago, and we have so far continued down this trajectory of having fewer active listings relative to last year than the week before. Now, obviously, if we want pricing to cool, we need to have more active listings relative to last year, not less. We need this line to reverse its downward trend and continue up again. Who knows if we're going to see that? That's why you should stay tuned. But we're not done. Let's take a look at the impact all these additional listings have actually had on pricing. And for me, this is what's really wild. We're looking at the median sale price of a home in Los Angeles. Again, 2024 is the orange line. 2023 is the blue line. If you don't think that line is blue, I'm a little bit colorblind. Let me know in the comments. I might be off. But look, last year, home prices rose from $794,000 at the beginning of the year to $851,000 at the end of the year. That was a year-over-year gain of about 7%. This year looks very similar, just more expensive. We started the year at $846,000, and now this week we're at $905,000 for a median sale price of a home in Los Angeles. That's down just slightly from last week's $906,000, but it's still roughly the same. We're still hanging out in this ballpark north of $900,000, and what's more is we're 7% higher than we were last year. So even though we have 15% more active inventory on the market, home prices are still up 7%. This is what shocks me about the Los Angeles market. This should not be the case. With listings up 15% and sales at about the same level, pricing should be down, but it's not. Welcome to the hellish crunch that is the Los Angeles real estate market. However, there is some good news for potential buyers out there. Let's take a look. Now we're looking at the percent of active listings with price drops in the Los Angeles metro. And as you can see, this number has just been going up and up since mid-April. In fact, this week we rose from 4.3% of active listings carrying price drops to 4.4%. Now, if we add 2022 to the graph, we see that we're not quite at the peaks we hit in 2022. This is when pricing really took a dive because rates doubled. However, the percent of price drops we're experiencing now is still well above where we were in 2023. This is indicative that pricing should moderate in the coming weeks, but here's a data point that's even more indicative of that. Now we're looking at the new listing median price for the LA Metro, and this is the median price at which a home is listed. This is a lot higher than the sale price right now. Right now we're at $960,250, but I'm bearing the lead. What's exciting is we took a huge drop this past week. Last week we were at $969,250, and the last 2 weeks have seen declines after 13 weeks of consecutive increases in the median list price. Here's what this tells me. Sellers are beginning to realize that buyers aren't keeping up with the prices they're putting out there on the market. To be more precise, listing agents are advising their buyers that they need to take their foot off the gas pedal a little bit and start bringing down the prices at which homes are being listed. And listing agents are doing this because the market's been a little tougher the past couple of weeks. If you're a listing agent and you're listing a bunch of homes and you notice that you're having to drop the price on more of them, or you're just not selling quickly on more of your listings, you're going to start encouraging new sellers to list a little lower, to have slightly more moderate expectations of how their home is going to sell. This is all evidence of a market that's softening. Will the market continue to soften as we head into the second half of the year? Subscribe and hit that bell icon so you don't miss any Los Angeles real estate roundup moving forward, so you'll know the answer.